Bitcoin is loading for a critical move. Whether it'll go up or down, no one knows. But what we do know are the critical levels of when to enter and exit and how to exploit any direction to our full advantage. The difficult part about Bitcoin right now is how it gives off polar opposite signals. It's confusing to say the least, and to those of you who follow other trading channels here on YouTube, you will quickly notice how some claim this to be the bottom, whereas others confidently proclaim that Bitcoin will go down to 24, 20, 18, 16, 13, and even as low as $10,000. I've heard them all. I'll be the first to admit, I have no idea whether Bitcoin's first direction upon leaving this extended sideways range will be up or down. I can give you technical checkmate arguments for either.
I can give you a checkmate argument for each side.
But technical analysis is not about knowing. What's more important in this situation is how to identify the key levels of relevance. In this case, as we're dealing in Bitcoin, or in our case Marathon for the leverage effect, we need to find an equilibrium, a balance in our position versus liquid cash so that no matter what happens, we'll be well off. Being fully invested at the moment subjects us to unnecessary downwards risks, as any downwards outbreak could cripple our portfolio, however temporarily, and more importantly, it would cause us to miss out on a rebated opportunity to increase our position size. Equally so, it would hurt us just as bad mathematically if we were to sell everything off right now. Sure, if Bitcoin were to plunge down, we'd be given a proper rebuy opportunity, but given that the long-term trend is still bullish, we'd be acting against the market, which on its own is a big no-no. What we need initially is for Bitcoin to leave this sideways range. Only then will we be ready to act and with more information. And until then, positioning ourselves in a win-win risk-adjusted way is our first line of business. As announced on the Long Life Trading Twitter last week, I closed a good portion of my swing position in Marathon. This will give me the opportunity to add on upon any Bitcoin plunge. And if this sideways range ultimately proves to be the bottom, then we can re-enter with the remainder once things are bullish again. Upon doing so though, we'll naturally miss out on quite a bit of value, but it will be a significantly reduced risk. So what then are the key levels and technicals that will ultimately determine when to enter and when to exit? So where then are we at? Well, technically we're kind of squeezed in the middle, and at the moment it's anyone's game, yet I have a plan regardless of the outcome. First of all, and as recently presented on Twitter, we have a Wyckoff versus WXYXZ, which sounds like an old lawsuit. An 1800s financier suing a 1980s German synth band. Or just Elon Musk's child. And to those of you who are not familiar with the WXYXZ, it's an Elliott wave continuation prior to an extended move in the direction of the trend, or downwards in this case. Now, the technical analysis from a couple of weeks back is still very much in play. In that analysis, we talked about strong technical resistance in the $46,500 area. If Bitcoin were to initially break out to the north, it would be naive to expect it to just make new all-time highs without a fight.
It was a fight!
If Bitcoin were to break down on the other hand, then any area in the 20,000s is a likely target, but with a bias towards the mid to low region. If we look at the 8-hour chart, we can see that we are in a big descending channel since the mid-May plunge. This one is a tad complicated as it does in fact disregard any wicks, yet it's nonetheless technically valid, and to be clear, we're not basing any decisions on this channel alone. It's just an aid to pencil out the roadmap. Now, within that big channel, we have a smaller channel, an ascending one, which in fact didn't make it very far until running out of steam. I've seen some technicians draw this as a rising wedge, however it is not. And upon peaking, it went on to form an even smaller descending channel within the bigger ascending channel within the major descending one. And all the while accompanied by a weak bearish blue RSI channel on the 8-hour and on the daily chart. And technically speaking, since the mid-June local top, we've established a lower low and a lower high. And given the raw technicals and how things have developed over the last few weeks, it seems like Mr. Wyckoff will have to step aside for the WXYXZ continuation, in which this in fact is a mini-market 4th wave correction prior to the final 5th wave move. And to be perfectly clear, we're talking a possible mini-market bear cycle here, as needs to be the case for a 5-wave bear count. With that said, the primary and secular trends are still bullish. Yet if the bulls were to win this short-term battle, that critical ABC correction that we've discussed in detail is still in play. All in all, the dangers are far from over regardless of the immediate breakout direction. As mentioned at the beginning and on Twitter, I have already released a good chunk of my marathon holding, and if Bitcoin were to break below 30,000, I'll release the remainder, naturally given that it occurs whilst the stock market is open. My sole intention in such case is to recharge my marathon position in Bitcoin's 20,000s, as the technical levels discussed in detail throughout this 2021 Bitcoin series. And especially so as I don't expect Bitcoin at all to stay at such low levels for long. For if Bitcoin were to break below 30,000 again, then chances are strongly in favor of an aggressive move and an equally aggressive V-shaped recovery. And such recovery would equally so break that long RSI resistance too. As it stands, the technical bias is in favor of the bears, yet that can change fast. And one thing in particular that I keep my eyes on is that diagonal resistance on the daily chart, with 7 or 8 touches so far, depending on how you count. For if Bitcoin were to break above and close above this, it's all I need to re-enter the entirety of my marathon position. Not because we'd expect Bitcoin to reach new all-time highs, no, we'd do so because we expect there to be enough of dammed up pressure to throw Bitcoin into the mid to late 40,000s for a neat 30 to 40% explosion. And then we add to that the leverage that marathon alone comes with, and we're in for a high risk to reward trade. One that will look something like this, and where the stop loss would be any RSI closing back below this line, at least within an immediate future, as the angle of that line increases the risk for each day in passing. If Bitcoin breaks below 30,000 and if the stock market is open, I'll release the remainder of my marathon position in order to buy it all back cheaper. And if the long RSI on the daily were to break, I'll use that as an entry for a guerrilla trade, and with the technical expectation of a pump towards the mid to late 40,000s. Until then, no one knows whether Bitcoin will yield to the bulls or to the bears. Yet from a statistical and technical point of view, the bears do look strong. Das war erstmal alles, danke und auf Wiedersehen.